This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live from the Bloomberg Businessweek studios in New York, on TV, on Bloomberg Radio, on Bloomberg Originals, and YouTube. It is Bloomberg Businessweek Daily. That is Emily Grafeo from the Bloomberg News cross-asset team. She's in for Carol Masser this afternoon and tomorrow as well, and we are just seconds away from the minutes from the third Fed decision of 2026. It was back on April 28th and April 29th. It was Jerome Powell's last as Fed chair. Our Bloomberg economics team noting that the minutes will give more insight into the split rate hold decision and show, quote, many or even most participants saw a case for neutral language. Those minutes now just crossing. A redhead on the Bloomberg terminal, the Fed saying that many preferred removing easing bias from the statement. The Fed also saying the majority saw a hike likely warranted if inflation persists. The officials generally judge rate pause will be longer than previously thought. In Washington, D.C., Michael McKee is Bloomberg News Federal Reserve reporter. He is international economics and policy reporter. He's standing by for the latest. Hey, Mike.
Well, it does appear that the minutes of Jay Powell's last meeting as Fed chair show that members were more concerned about the possibility of a rate increase down the road than perhaps the markets were thinking. High energy prices contributing to inflation because of the Iran war, amid concerns the war could drag on long enough that inflation expectations become unmoored. While participants generally expected that tariff-driven inflation would ease during the course of the year, some noted tariffs could be increased, leading to additional upward pressure on prices. And given all that, almost all participants noted there was a risk that the conflict in the Middle East could persist for an extended period, or that even after the conflict ended, the prices of oil and other commodities could remain elevated for longer than expected. The vast majority noted inflation could take longer to return to target than they had previously expected. A majority of participants highlighted, the minutes say, that some policy firming would likely become appropriate if inflation were to continually run above the 2% target. To address this possibility, they continue, many participants indicated that they would have preferred removing the language from the post-meeting statement that suggested an easing bias. And remember, it was a 9-3 vote to remove that bias, but apparently a number of additional participants who weren't voters agreed with the three who wanted to take it out. Overall, the economy was performing well. The minutes say the labor market appeared stable, although uncertainty about the future outlook for the economy might have been holding down hiring. There was also an extended discussion of financial stability, with participants concerned about the possibility of losses in private credit that might lead to a broad credit contraction. A few worried about hedge fund participation in the Treasury market, noting that unwinding of leverage positions by those institutions could generate broader financial market pressures. And many mentioned concerns about cybersecurity. Tim and Emily?
My ears perked up when you said private credit. I mean, how unusual is it to see the central bank opining on a specific asset class in these minutes? And do we have, I know you're just reading them right now, but do we have any more insights into more risks that they flagged on that sector?
We don't really have any more. It doesn't go into great detail about it. But remember, private credit's been in the news a lot, and there have been some funds that halted redemptions. And so there are questions about what that would mean. And so apparently members decided that they were going to discuss it, and they did express some concerns, perhaps more than we've normally heard, certainly from participants in the private credit space who say it's not a risk. Fed officials see that there perhaps could be something out there.
Hey, Mike, on the war, that got me thinking about what the Fed actually can do when it comes to a higher inflationary environment as a result of higher oil prices. It's not like the Fed can bring down oil prices. They can only tamp down demand. What does an extended period actually mean in Federal Reserve speak, and how it could affect rate policy?
Well, they don't specify, but it probably means months. And they're talking about more than just high energy prices. They're talking about high energy prices feeding into other parts of the economy and parts of the economy that perhaps use petroleum to make products or to deliver products, and that would push inflation expectations higher as a broader price increase started to affect Americans. And that's what they're particularly concerned about. And what they did seem worried about is that this conflict could, and so far has, lasted a lot longer than the administration suggested it would. And so as long as that continues, that increases the risk of the inflation expectations problem.
Michael McKee, Bloomberg TV and radio, international economics and policy correspondent, live at the Federal Reserve in Washington, D.C. Thanks for that, Mike. Well, now to the most anticipated IPO of the year, one of the most anticipated IPOs of the year. No, we are not talking about SpaceX. OpenAI is preparing to file for an IPO in the coming weeks. It's targeting a public debut sometime in the fall, this according to a person familiar with the matter. The Wall Street Journal reporting on OpenAI's IPO filing plans earlier on Wednesday. Reuters had reported in October that the IPO could value the company at as much as $1 trillion. I want to bring in Ed Ludlow, the co-host of Bloomberg Tech on Bloomberg TV. He joins us from our San Francisco bureau. Ed, we were going to talk to you about SpaceX at one point, today or this week. That's all we've been talking about. And then we see the news that OpenAI could be filing in the coming days. What else can you tell us?
Curious timing.
Is it because of?
Yeah.
Is it because of the lawsuit, or is it because of what SpaceX is doing? Are these? There's a lot of Elon tied up in this.
Yeah. So our source at Bloomberg is saying that it's coming weeks. The Journal had said coming days. And there is a distinction between that in when you're filing. The net is OpenAI being in a position where it could be ready to IPO September. We had been much more firm in our reporting on Anthropic, that Anthropic was looking at October for an IPO, but very much framed in a race, right? So to answer your question, the overhang was the trial. Musk suing Sam Altman, the CEO of OpenAI, and the other co-founder, Greg Brockman. And indeed, Bloomberg Intelligence has written about this in their research, right? Once the jury decided to reject Elon Musk's suit, even though Musk plans to appeal, it removed an overhang on the idea that OpenAI could move forward to a IPO, in part because of the potential financial penalty that Musk was pursuing. That's where we stand.
But still, Ed, the timing curious for maybe a few more reasons as well. I mean, we have SpaceX also preparing to go public. We have Anthropic. You have to wonder whether all of these firms are kind of rushing to tap into the public markets before the AI momentum slows down.
Yeah, I guess that's an important point. Whenever you have a big IPO, particularly a technology IPO, there always has to be a story behind it, right? Mm-hmm. Our reporting is that SpaceX's S1 could flip public today. Brace. It could be a wild few hours to come. But there's also the issue of is there infinite liquidity in capital markets? If SpaceX is going to do the biggest IPO of all time at a valuation of more than $2 trillion, raise $75 billion, and then do the math on how much of the company they offer, does that take the oxygen out of the room for an OpenAI or an Anthropic, right? If OpenAI and Anthropic both want to go public, towards that September, October timeframe, end of the year, that gives investors a really interesting choice. And part of what we've been reporting over the last 6 months in aggregate is Anthropic has a lot of momentum right now. And the big take overnight is a case study of SoftBank being very concentrated in OpenAI.
Yeah.
These are all considerations.
I love that story. If you missed that one, check it out on the Bloomberg terminal. Today's big take, as Ed mentioned. Ed, on the Anthropic side of this, does timing matter? Who's first? And because if we think about these two different companies, the way that they're valued and what they offer, is it fair to say that investors will be making a choice of one or the other?
It's very bifurcated in private markets. There are those that stick to OpenAI, right? SoftBank is an interesting example. There are several venture firms and late stage or private growth equity investors, indeed sovereigns, that have exposure to both. the latest reporting from us is that, Natasha and I reported, I think it was last week before, Anthropic is now sort of taking more seriously raising money in the private markets, like more than 35 billion at an valuation between 900 billion and 1 trillion. The reports on what OpenAI's valuation would be in an IPO is 1 trillion. And basically the way that it's put to me, Tim, out here on the left coast or the west coast is you have Anthropic, OpenAI, Google, Meta, XAI, several lanes, but in the market, is there room for all of them? And that conversation comes up quite a lot.
And I mean, you have to wonder also, like, how much money, how much more capital do they really need to raise? Ed, can you tell us a little bit about, like, what are really the stated goals, at least for OpenAI, for what they would do with this new capital that they would raise from an IPO?
Well, they do. The argument that OpenAI, to their credit, has been consistent on is that if they had more compute, users of their technology would not be constrained, right? That's something that's been talked about on social media just in the last 24 hours. But they could also offer more stuff. The concern is different. The concern is that the revenue growths just simply do not keep pace with the spending growth to justify an IPO, right? When you go public, you through the mechanism of the filing, you open that up to the world about your business and the finances of that. And, in the world of tech, profit isn't always important, but investors still want to kind of see what the plan is longer term, the total addressable market and the road to profit. And so that's more of the calculus with OpenAI specifically.
Well, let's talk about those books, Ed. I mean, it's a private company at this point. It's, we don't know. We don't have full disclosures at this point, but what can you tell us what has been reported when it comes to OpenAI's books? What numbers do we know?
I'm trying to scramble to pull up my notes now, but basically, the revenue run rates in the tens of billions, and the OpenAI's own projections for the coming 12 months through the 2030 is for a lot of growth. But you have to remember that OpenAI is on the hook for also almost $1 trillion of projects around the world, largely relating to infrastructure, where there's a mix of it's committing capital, or a partner is committing capital on its behalf, or it is on the hook to be the lead tenant and lease that capacity, but somebody else has built it. So that's the underlying concern. Revenue in the tens of billions, but the exposure, the committed spending over time being in the hundreds of billions, and that being worrying.
Did I hear you say anything about profit?
Yeah, I don't. I just don't think we're anywhere near that, right? How in the economics of AI, for a company that trains a model and then deploys it through a series of products, it's on a dollar per token basis.
Okay.
Right. That's the study, but your compute costs will directly factor into that.
There are some people out there, Ed, who may be old-fashioned and say maybe a company should wait until it's profitable, at least for a few consecutive quarters, to go public. Is that a different era?
Oh, I don't know. As a student of Silicon Valley, and one of the reasons I came here to San Francisco, like the people that back those companies at an early stage, right through to taking them public, whether it's software or hardware, there's not really that focus. We should not get into this, but it's like I remember the days where people were fixated on whether Uber would have positive EBITDA. And it was like,
and there are plenty of companies, we should know, there are plenty of companies that do go public that are not yet profitable, and there's definitely investor appetite. No question.
Yeah. The one thing I would say real quick, remember Rivian, right, was the 6th biggest IPO in US history. And that was in 2021. Yeah, here we are, they're still not profitable. So, that's a good indicator.
Who is poised to benefit most from the OpenAI IPO? And I imagine some of the investors in OpenAI right now are some of the ones that are also tied up in these other large companies potentially going public soon.
Well, it's a mix of the strategics, which are other technology companies. I would say to the audience, go and read our reporting, which was linked to the trial between Elon Musk and Sam Altman, again, dismissed by the jury and the judge, but about Microsoft's economic gains from its initial investments in OpenAI. And then at the other end of the spectrum, you have somebody like Vinod Khosla of Khosla Ventures, a venture capitalist who wrote one of the first institutional checks into OpenAI at the time that was at issue in that trial, like very early stages where it was a very different beast. And so over time, and then the people themselves, right? Sam Altman has a very curious lack of stake in OpenAI, which you can read about. Greg Brockman has a more sizable stake. You know, the individuals at play as well. That is what's at question here.
Ed, remind us how OpenAI has been changing its business, sort of trimming or more focusing on certain parts of its business ahead of an IPO. I'm thinking about Sora, for example.
Yeah, so like, you know, Sora was an interesting project. There was a partnership and sort of financial relationship with Disney that was scaled back. You know, Sora being a tool that is a text to image tool. So when we talk about generative AI, generative can mean you create something that's in different forms. We're very accustomed to ChatGPT, where the input is text, the prompt is text, and the output is text. In Sora's case, it was image, but it didn't, you know, both on usage and the compute costs and the net results of it didn't really work. So that's part one. The other part, you know, and this is where it pits itself more closely with Anthropic, and based on our recent reporting, Elon Musk's xAI as well, is going after the enterprise customer. You know, think in the world of finance or healthcare, etc., getting those organizations at scale to use either the underlying model or to use the tool. That has been an area where Anthropic really focused, and it's been a big driver of revenue for growth for them. OpenAI's origin was ChatGPT. Everyday people like you, me, and Emily just using ChatGPT for hours and hours, but they want that enterprise business to kind of outpace it.
Right. I'm very curious if there's going to be any use of ChatGPT, at least on the banking side. They're probably not allowed to do this, but drafting these prospectuses. But that's not my question for you, Ed. My question is, of course, when the paperwork finally comes out, can you sum up like the one or two big questions that you have about this company that will potentially be revealed in this paperwork?
Wait, we're still talking about OpenAI?
Yeah.
Well, so this is the thing, right? So like there's mechanics to this. What we're talking about is, in the first instance, reports from various media, including Bloomberg News, that they are thinking of filing confidentially. It hasn't even happened yet.
Right.
Then there's a period of time where you don't know what's in it unless you know somebody pretty high up on the inside, until it flips public. That's the moment we're waiting for today with SpaceX. SpaceX filed confidentially May 4th, not May 4th. Tim, when was I in Florida for Artemis? The beginning of April.
Yeah, beginning of April.
Yeah, so then that was when we reported, citing sources, the confidential filing. What happens after that is it goes back to the SEC. The SEC makes recommendations for how it could be changed and updated. And at some point, it goes public. And that's when you find out about everything. So I'm not answering your question, Emily, but I think we're probably a little ways off from learning. Well, but it's about financials, where they see the addressable market, and then surprises along the way, like the structure of the company,
but
ownership.
I'm really glad you went to SpaceX, and that's where I want to end just in the last minute with you or so. And it's about SpaceX AI, as it now is, versus, Anthropic and OpenAI, specifically in the context of OpenAI and a potential IPO. Because SpaceX now has xAI as part of it, does that pull some oxygen / interest from OpenAI and Anthropic? Yeah,
so like one easy answer is like debt. So when SpaceX merged with xAI, the SpaceX part was valued at about $1 trillion, the xAI part $250 billion, so the combined entity $1.25 trillion. But SpaceX also took on xAI to its balance sheet, which would include debt. So then that should be disclosed in the S1 when it gets flipped publicly. There should be something in there about that. It's like also the story. Why is a rocket company who's building constellations of satellite for internet, Starlink, and wants to build data centers in space, acquiring a frontier lab? That should kind of be answered, right, in the document and prospectus, because it will help investors understand it ahead of the IPO. And there's also the question, Ed, that we don't have time to answer, what it means for Tesla and Tesla shareholders, because that's part of the conversation too. Ed Ludlow, the co-host of Bloomberg Tech on Bloomberg TV. Coming up next, well, we're going real estate and more. That's on Bloomberg Businessweek.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Oil is slumping. Equities are gaining on hopes of a deal to end the war in Iran. Also, as retail companies delivered solid earnings. And, of course, coming up after the close of trading, Nvidia, the big event. Nvidia shares ahead of that report up now by 1.6%. Right to the equity numbers with the S&P up 65 at 74.18, higher by 0.9%. Dow Industrials up 561 on the Dow, a gain of 1.1%, while NASDAQ up 336 for the NASDAQ Composite Index, a gain of 1.3%. The Russell 2000 Index of small cap shares up now by 2.2%. 10-year 4.57%, the 2-year 4.04%, and the 30-year 5.11%. Gold is up 1.2%, 45.35 the ounce, while West Texas Intermediate crude oil 98.32 a barrel. WTI right now down 5.6%. Barrel of Brent crude just below 105 a barrel, down 5.1%. Again, recapping here, stocks are moving higher. S&P up 0.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pella, Tim and Emily. That is a Bloomberg Business Flash.
Hey, Charlie, thanks for that update. Lots of news this afternoon. It's not just Nvidia earnings after the bell. It's not just a potential OpenAI IPO. It also has to do with what's happening around the world, and specifically in Cuba. The U.S. charged former Cuban President Raul Castro with murder, sharply escalating a standoff with Havana as the Trump administration attempts to force change on the island after nearly 7 decades of communist rule. Myles Miller is following this story. He's Bloomberg News senior reporter who covers law enforcement. He joins us from our Miami bureau. Myles, what's the latest?
Yeah, so this indictment really boils down to an indictment against Raul Castro, some heads of the military, as well as the pilot involved in the downing of a plane that was being flown as a rescue mission. And among the charges are the conspiracy to kill U.S. nationals, as well as the destruction of an aircraft and 7 counts of murder. Let's take you back to 1996, February 24th, 1996, the shoot down of the brothers to rescue planes over international waters. That is the pretext that the U.S. government is using to indict Raul Castro. Now, you may be thinking, is this possible? Will he be able to be brought to justice in the United States? We just heard from Todd Blanche, the acting U.S. attorney, who says that they expect him to come here by some means. Now, what we learned is that he won't speculate on just how he'll get here, but we heard from the Cuban government about 30 minutes ago, and they say that these charges are basically hogwash and that they have no bearing. So it doesn't seem as though the Cuban government will be getting Raul Castro here anytime soon. He's about to turn 95 years old, but the U.S. government expects him to answer to these charges. Very serious charges. 400 people in that room in Miami, just a few blocks away from here, to see justice served in this case.
Myles Miller, Bloomberg News senior reporter who covers law enforcement, joining us from our Miami bureau. We'll be sure to bring you updates as they do cross. Meantime, as Alex Semenova reminded all of us yesterday, bears have had a tough time over the last few weeks. This epic rally, 17% in the S&P 500 since the end of March. One of those bears is Thomas Thornton. He's president of hedge fund Telemetry. He joins us here in the Bloomberg Businessweek studio. Also with us is Alexandra Semenova. She's Bloomberg News stocks reporter. Good to have you both with us. Tom, I just want to start with you. First of all, thank you for coming on. I love the IBs you send me all the time with the technicals, pointing out what you're seeing in the market. So it's good to have you on set. You see a lot of risks out there right now. What are you seeing that you think other people are ignoring?
Well, I think the biggest risk right now is positioning, clearly. And I'll start at the top.
Yeah.
The Bank of America Global Fund Manager Survey came out yesterday, and it showed that equity exposure is at the highest level ever. I mean, we're going back to 2000. So we then drill down and say, well, where's everybody, in this market? Technology versus the S&P made a new relative high with the S&P. Okay, great. No other index did, or sector did. That's a troubling first, clue right there. And then if you run the semiconductor index versus the XLK, which is the technology ETF, you see that semis have clearly done it in magnificent form since the beginning of the quarter. Then, if you think about Goldman Sachs, their prime brokerage business, they put out great data, and they said that almost 20% of their clients, hedge funds, institutional investors, are weighted towards semiconductors. Okay, that's a lot. Now, if you think about the DRAM ETF, it's $10 billion apparently today, and maybe it's a little bit more today, but in 6 weeks, $10 billion is a record. Now, this is not necessarily normal behavior, and these are not necessarily normal long-term ETFs being set up. Now, Korea, I'm reading about Koreans ages 50 to 60 plus that are turning in their life insurance policies to buy the Korean market that has gone parabolic. 50% of the Korean market are two stocks. They're memory stocks, Samsung and SK Hynix. Now the Koreans, the leverage ratios are off the charts. So not only are they speculating in their markets after a big run, it's very narrow. And to me, I think positioning trumps fundamentals right now. The fundamentals, every semiconductor technician or CEO will say, oh, they're great. Everything's great. We've got a long lead time. They say that every cycle. Maybe this cycle's gone a little longer. I'm guilty of thinking that it would end. So that's where people are. The boat is a great boat, but everybody's on one side and it can still tip over.
You mentioned, Tom, all these areas of the market where things are getting euphoric, the DRAM ETF, Korean equities. We're also getting SpaceX going public at a time where things are already looking a little bit too enthusiastic. What does this add to that existing euphoria, and does that make you more concerned? We also have a pipeline of other mega IPOs, OpenAI, Anthropic. What is that telling you?
Well, a lot of the valuations are sort of made up. And if you think about, they made up the XAI, $250 billion. They merged it with SpaceX. Of course, Elon Musk is the largest holder of both, so he gets more power. You had 11 of the partners at XAI leave. You had 80 programmers leave. I'm not quite sure what is there for $250 billion, but the IPO will probably work. It's a small float, and the small float IPOs tend to go up. Everybody gets excited about it, but the valuation doesn't make any sense to me in this decade. So I'm not going to be buying it at all. And it could go up. Everybody loves Elon. They'll probably merge with Tesla. Tesla's business is starting to falter. So it all just sort of makes sense for Elon.
You were talking about positioning and how that's driving a lot of the equity market gains that we've seen. And I'm curious how you kind of see that ending, because it seems like what you're saying is the reason why stocks have kind of shrugged off the rate rise, the volatility in oil, is because people are continuing to pile into the market. How do we know when people will stop doing that?
One of the things that is actually gives me a little hope is that we're starting to see a lot of stocks hit new 52-week lows. And again, the technician nerds that I'm talking with, like the Jonathan Krinskys out there, we're all looking at seeing more new 52-week lows than highs, and that's remarkable because the S&P is up around 24% year over year. So if you're seeing new 52-week lows, things underneath are really a little shaky. So I think there's going to be some sectors and ideas that make sense to buy, that the valuations get to levels that you can do.
We're going to get a read on Nvidia after the close today, and I think that will set a big part of the conversation moving forward for a lot of these companies. But if we go and utter those words that nobody should ever utter, which is this time different, then maybe we think about it in the context of productivity gains and productivity increases as a result of this technology, which some have called a new industrial revolution. Is that wrong?
No, I think that AI is here. It's it's fascinating. It's getting better.
But it's overvalued.
I think there are certain places that show overvaluation, and I think the biggest bottleneck for this, well, there's a couple. Funding all the build outs. There's a lot of circular stuff. A lot of people have talked about that. But I think the main one is powering the data centers. And I still think that that is going to be the difficult thing to turn on the lights. You can build out the data center, but you really need more power. And power plants take time to build, take time for approvals. So I think that if anything starts to wobble in this, you might see some push-outs as far as when the data centers are going to get built. Again, the funding issues, higher rates, that's not helping. Private credit stuff is still out there as a risk. So that would be the one thing I'm watching right now.
It feels like people continue to be unanimously bullish despite all these risks that we're all very aware of. What has it felt like for you to be a contrarian? How painful has it been?
I've aged 20 years in the last 6 weeks. I can say that my P&L has not benefited. It's really suffered. But I also know that since I've been in the markets a long time, I've seen these things happen. They tend to stretch a little longer, like this one. But when you see the narrowness of where people are, you see the type of people that are buying these things late after a big move, I have confidence that I'll be proven right. And, it's not that I'm, overly bearish all the time. I do find times where I get overly bullish.
What does right look like to you?
What do you mean by that? Like,
you said you'll be proven right over time. What is that? Does the S&P 500 have to fall to a certain level for you to feel like you've been proven right? Does Nvidia's valuation have to fall? Where does that manifest?
Well, I think that just because of the positioning right now, I think there could be a catch down to where the rest of the market is. And it's not necessarily saying the businesses are under, are bad or something really bad is happening. I just think that people will see and maybe panic and sell, and they're levered again. So I think that's kind of where I see things. And I was covering part of my Nvidia short at the lows. I covered, some of my technology stuff, semiconductors. I didn't cover enough. Let's just, I want to boom. But that's it's been rather extraordinary. When you had 18 days in a row of the semiconductors going up, I seriously was, questioning things myself, life,
You're getting philosophical. Look, I don't think you're the only one. Right now, there are certainly a lot of vocal bulls out there, and we appreciate the way you're thinking about things and you sharing it with us on Bloomberg Businessweek Daily.
Well, thanks.
A big thank you to Thomas Thornton, president of hedge fund Telemetry. Also, Alexander Semenova, Bloomberg News U.S. stocks reporter. We did mention that we have Nvidia after the bell today. This on a day where we are seeing the S&P 500 snap a 3-day losing streak. The S&P up close to a full percentage point right now, 74.22. The NASDAQ composite up 1.4%. The Dow up 1.2%. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil is slumping. Stocks are pushing higher. Equities are gaining. Oil prices are dipping on hopes of a deal to end the war in Iran. Also, we got retail companies delivering solid earnings. And speaking of earnings, Nvidia reports after the close of trading. Nvidia shares right now, they're up by 1.5%. Tech is rallying. NASDAQ up 1.4% right now. The NASDAQ 100 index up 1.5%, keeping it all in context. S&P 500 index up by 1%, higher right now by 71 points. Dow Industrials up 610 on the Dow, up now by 1.2%. The 10-year 4.57%. The VIX just below 18 now. The 2-year 4.04% with a 30-year at 5.11%. Gold up $58 the ounce to $45.51. Spot gold up 1.3%. West Texas Intermediate crude now below 98 a barrel. WTI down 6.1%, 97.82. Barrel of Brent 104.68. Brent crude down now by 5.9%. Bitcoin up 0.6%. Bitcoin at 77,443 on Bitcoin. OpenAI is preparing to file for an IPO in coming weeks and is targeting a public debut sometime in the fall. The company is working with Goldman Sachs and Morgan Stanley to make a confidential IPO filing as soon as Friday. Goldman up 5% right now, Morgan Stanley up 4%. Recapping, S&P up by 1%. Tim and Emily, that is a Bloomberg Business Flash.
All right, thanks for that update, Charlie. Do appreciate it. Our Bloomberg News team reporting today that Scion Group and Ares Management bought 12 U.S. student housing properties. This is a fund from Ares for roughly $910 million. It's the first deal for this newly formed partnership. The venture purchased the properties from Harrison Street Asset Management, the sites near schools including the University of Notre Dame outside of South Bend, The Ohio State University in Columbus, James Madison University in Harrisburg, Virginia, among others. Rob Bronstein is with us. He's CEO of the Scion Group. It's one of the world's largest owners of off-campus student properties. Also with us here in our Bloomberg Businessweek studio is Norah Mulinda. She's markets correspondent for Bloomberg TV. Rob, the new partnership will focus on acquiring these off-campus buildings. They're near the top universities, growing enrollments. Other markets where you purchase these properties, Tempe, Arizona, Binghamton, New York. Where else are you looking that you haven't bought?
Sure. Well, I have to say, as a University of Michigan grad, I'm not thrilled that you're calling the University of Notre Dame and Ohio State top universities, but we go with the
Well, my wife went to the Ohio State University, so some might say I'm a smart man for saying that.
Yeah. You know what? We really like flagship state universities, particularly in growing Sunbelt states, and even more so where they have a STEM focus. So, for example, some of our largest campuses would be Texas A&M, University of Florida, Florida State, Purdue University. We're at about 90 campuses now. There's probably another 20 to 30 that would fit our investment thesis. And by and large, they fall within that theme of large, I would say at least 20,000 students, typically 30, 40, 50,000 students. We tend to prefer public over private, but it's situational. And again, schools that we think really represent a strong return on investment as far as the tuition dollar.
Yeah, talk a little bit about how the return in student housing compares to other commercial real estate sectors. How do you actually generate a return here?
Well, look, we actually, we've been at it for 26 years. We've been ever refining the skills and the capabilities we have. We think we've built, really the premier operating platform for student housing. It has certainly similarities to other types of commercial real estate, particularly multifamily, senior housing, but there are a lot of nuances that are specific. Some of them include the fact that we're dealing with 18 to 24-year-old consumers who are tip of the spear as far as technology adaptation, the fact that they're often looking for a different experience as they matriculate in their sophomore, junior, and senior year, and things just move at a really, really fast clip within student housing. That certainly, when we talk to people in other areas of commercial real estate, that's their observation as students. And again, I think it's the age and the stage of life that our customers are at. One of the reasons why we and others have found the sector to be so resilient is because of just how much families prioritize higher education for their children. A great story I like to tell is our chief operating officer came from Disney, and he said, families like to save for 4 to 5 years for a Disney vacation. I said, that's great. Families save for 18 years to get a college degree, and maybe even before the kid is born in this country. And that's really what makes it so strong and so resilient, is the importance that we as a society place on being able to give this to our children, our grandchildren.
Rob, how are you thinking about demographic shifts, affordability pressures, and just broadly changing enrollment patterns right now?
You know what? I feel gratified that we've been focused on this for a decade. Since I'd say about 2015 or 2016, we've been extremely focused on the schools and then the properties within those schools that represent the greatest value. So, the 105,000 beds that we own and operate across the country, and this new acquisition fits squarely within that, is in the 50th to, I'd say, the 75th percentile in rent price. And we think that casts a very wide net as far as value and affordability. I think that people are absolutely right to be concerned about some of the highest end product that is being added with just ever more amenities and ever more cost. That's not where we play. That's not where this portfolio is. So I think you want to look first and foremost to a university that represents a good value. And so getting an engineering degree from a public university, for example, is about as strong as value could be. And then once we're at a school like that, if we can cast a wide net of product locations and floor plans and price points that across the board deliver value, that's where, we feel really comfortable for us and our investors being.
How do you think about the idea of fewer foreign students really impacting the pool of potential renters when it comes to student housing?
Across our portfolio, it's typically in the low single-digit percentages. It's 1%, 2%, 3%. And by and large, those are graduate students. Our portfolio is predominantly undergrads. I will tell you, compared to other international markets where students coming from overseas are a very, very large component. If you look at Australia or if you look at the UK and Spain, for example, those are heavily dependent on students coming from the US, coming from Korea, coming from China. That's not been the case in the United States, never been the case in the United States. What's really unique, I think, about the US compared to other markets is just not only how first of all, we're by far and away the largest market for higher education in the world with over 20 million students. But on top of that, the lifestyle for undergrads in the United States is to often travel hundreds or thousands of miles away and have a true residential experience. That's not as much of a phenomenon as you go around the globe. And so for our portfolio, again, we may have certain assets that might be 5 to 10% international students, but by and large and across our portfolio, it's around 1 to 2%, and I don't really see that changing.
Just in the last 45 seconds here, Rob, I know some might not agree that these are top universities, but the universities that I would, but I don't know how Rob feels. Some of these are really competitive schools, though. These are
not happy about Notre Dame, but we'll make it.
These are really popular. There's a ton of demand for students to go to these schools. Some, smaller regional schools are actually losing enrollment, though. So I'm wondering how much is this really a bet on these elite universities continuing to consolidate demand versus a bet on, student housing in general?
You are 100% right that a long overdue consolidation is occurring in U.S. higher education. I think that smaller liberal arts colleges and lower tier public universities are going to continue to be under pressure. Fortunately, this portfolio and our overall 161 community portfolio has long been has solely been focused on larger, typically public universities. So that trend is happening. It's not going to reverse. I think when you look at other sectors of the economy, like healthcare, for example, I think higher education is undergoing a similar type of consolidation. And absolutely, the winners will be the largest, most resource school, and particularly the ones that I think that families can really, it's a no-brainer that they're getting a lot of return on their tuition dollar investment.
Rob Bronstein, CEO of the Scion Group, joining us from Chicago. Also with us, Norah Mulinda, markets correspondent for Bloomberg Television. A big thank you to both of you. Just some breaking news that we're getting. A runway at LaGuardia has been shut down after a sinkhole was spotted nearby. The runway was immediately shut down, and travelers should expect delays and cancellation, according to the airport, particularly with forecasted thunderstorms expected later today.
You're listening to Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. We're just over an hour away from the close of equity trading, and the S&P 500 is snapping a 3-day losing streak, up right now 0.9%. The Nasdaq Composite up 1.3%. I'm pulling up shares of Nvidia because that is reporting after the bell. They're up 0.7% off of earlier highs. This is a company that is the most valuable company in the world, a $5.3 trillion market cap. It was just a couple weeks ago when we were talking about it's pretty close to $6 trillion in market cap.
Right. Well, that's a good point that you raised, because just a few days ago, it had raised something like $900 billion in market cap. But we are seeing a rally today, not just in Nvidia, but in the broader equity market and the bond market as well. Yields finally coming down from the highest levels since 2007, but still relatively very elevated.
Yeah, so a little bit of a reprieve there, and that's what we saw yesterday. That had a lot of investors concerned. The SOX also moving higher to the tune of 3.7%. 27 of the chip names in the SOX are higher today. Only 3 are lower, including Analog Devices down about 5.5%. I'm Tim Stenovec, along with Emily Grafeo. Let's take a look at some stocks on the move today. We are joined by Bloomberg News cross-asset reporter Denitsa Sakova. Hey, Denitsa.
Hi there. One stock that is not having a great day today is Target. It actually had a pretty strong earnings report, but it was about the earnings call. The company issued more cautious tone about the coming months, and the investors are having a pretty bad reaction. After the earnings report came, the stock actually rose, but now the stock is down more than 6%. The ticker, of course, is TGT. We looked at the report. Comparable sales jumped 5.6%, biggest increase since the end of 2021. We look at the annual revenue guidance, that was up by 2 percentage points. So the earnings reports was really, really strong. But what happened on the earnings calls is that the company warned about tougher comparison in the current quarter, more challenges ahead, and that the benefits of the tax refunds are fading. So kind of a triple threat, just as investors were excited. The company is up still more than 20%. This is a very competitive space. We're seeing the pressure on consumers. We're seeing all those inflation concerns. And of course, we have Walmart and Costco taking some of that share and really expanding their online shopping. So it's very competitive. And, you can see investors are punishing it just because of the earnings.
Yeah, Target TGT, the stock up 22% this year.
Yeah.
Getting a little punished today. It has just been beaten up, though, over the last few years. I mean, if you think of those post-COVID highs back in June of 2021, it's still down 43% since then.
Yeah, the COVID story was their big boom, and they kind of never went back to that place. But this year was a good example. They were doing quite well until today.
So maybe the new CEO still has some runway.
Yes, there are some good signs.
Mm-hmm.
Okay, another stock that was hot during the pandemic and actually is still hot today, Denitsa. Kava, one of our favorite slot bowls.
It's a great slot bowl. And what came in the earnings report is that they're affordable slot bowl. I actually found that pretty interesting. They say their chicken and falafel bowls are less than 12% on average across the U.S. So I'll take that to you if you think
less
it's
than
affordable.
How much?
Less than $12 on average.
Outside of New York City?
US. So I don't know if it's affordable, but the stock is up about 4% and up nearly 40% year to date. It came off the company raising its annual sales outlook. It's clearly people love it. You know what they really like? Their sides. They have those limited time sides. They have white sweet potatoes, sour cream, onion pita chips, and stuff like that, which the CEO says apparently is really helping. I guess it really adds up. Even if your average meal is not as expensive as some other chains, when you add the sides, it probably comes to a pretty hefty price, and consumers are happy. They're getting something limited.
This was also a company that, in the last few years is down from recent highs, like January 30th, December of 2024.
Yes.
The stock was at $150 a share, now down to $81 a share. So yes, again, having, a good few months, but a far cry from what it was when everybody was like, wow, is Kava overvalued?
Yeah, it's been a really tough time for all those chains. We've been talking about Sweetgreen. We've been talking about all those bowls that was kind of abundant during the pandemic, past pandemic, and there was such a boom. And now definitely investors are judging it a lot more rigorously. But nevertheless, pretty strong day for Kava.
All right, and so in the last minute here, Denitsa, one more company, a toy company.
Yes, Hasbro is down more than 7% on Wednesday. The company maintained a sales forecast for the year that was on the low end. That pretty much disappointed analysts. What we're seeing is they're attracting a lot of older consumers and adults with their board games, card games. Like one popular game is Magic the Gathering. So they've been tracking this for some time, and it's been a successful strategy.
You know why it's attracting adults? Because when I was in fourth grade, people played Magic the Gathering, and now those fourth graders are in their 40s. And now they're buying Magic
I was going to ask.
Gathering.
I feel as though you played that game.
I don't remember how to play it, but it's just shocking to me that this is still, a thing. So
For sure. But yeah.
No magic cards for you guys?
No, but I played with plenty of Hasbro toys.
I'm sorry to disappoint.
Also,
Dungeons and Dragons? It's another Wizards of the Coast.
Yeah.
I didn't play that.
No, I'm sorry. I'll do it after the hit.
Yeah, it's popular with crypto people, actually. I have heard that.
That is not surprising. Bloomberg News cross-asset reporter Denitsa Sikova with Stock Movers on this Wednesday. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. That's going to do it for our TV hour on Bloomberg Businessweek Daily. If you're sticking with us, we got a lot coming up, including continued coverage of real estate and more when it comes to Nvidia. Those crossing just after the bell. The close starts now.